Hey guys, Steve here with another educational video. Wanted to go over a trade that I just exited my personal account in Caterpillar. Kind of show you what I was looking at originally and how I trailed the stops and eventually exited the position on Friday. So first thing I want to look at is on the weekly chart. We're going back now. This is for 2013. So I was looking at this consolidation area here in Caterpillar. So I was putting in a nice base at the time, which is also represented in this area here on the daily chart. So what we were waiting for was obviously a breakout from that box on the weekly chart, which we started to get over here on the 16th of December. So let's move to the 16th of December on the daily chart. December 16th. So right in here, this area here. So we were starting to get a breakout. And as I said, I allow the weekly breakout to happen and then look for a breakout on the daily or a consolidation on the daily to really be able to size the position properly and make sure that the stock is moving in the right direction. So once we got the breakout on the daily, then what happened was it started to put in some sideways action on the daily chart. It came down, it had earnings, and then a few days later it started to break out from this consolidation. So on the 30th, I think was my trigger. So I entered long at 92.13 the following day, which would have been January 31st. So at this point, I'm long the stock. My stop is down here at 86.12. So it was about a $6 risk on the trade for a $92 stock, which is perfectly fine. It's within the parameters. There were no earnings upcoming because we had this breakout here on the 15th. But I did not enter long at that point because earnings were coming up on the 24th. So, still following the rules. So we were able to stay out of this little downdraft here and then enter here on the 31st. So let's take it through. So there's the entry right in this bar here on the weekly chart. Okay. So now let's take it through on the daily chart and see what happens. So obviously the stop right now is still 86.12. It moves higher and it starts to consolidate. Okay. And it's consolidating. So at this point, stop is still 86.12 until we get a breakout from this consolidation. All right. There's the breakout that happened in CAT. So now we have a higher consolidation and the breakout. So we're able to actually take our stop from 86.12 and move it all the way to 95.26. Okay. So right there, we're now locking in some profits. I would say from the 31st to, so it took about almost 2 months before I was able to actually move that stop up. So you can see how this trend following is a much longer term time frame. So like I said, ideally, yeah, you would love to move your stop up in say a week or two, but this actually took me about a month to move the stop, or 2 months. I'm sorry, 2 months. So stop now is 95.26, and the trend line. This trend line I obviously drew with a little bit more information that we haven't seen yet, but that's the trend line that at this point we probably would go off of a trend line, something more along these lines. All right, once we had that breakout. So now that stock's moving higher, still not in another consolidation. Moving higher. All right. So this one you could actually say was another small consolidation. Okay. But going off the idea that this is a consolidation, we had another breakout. So now stop moves again to 101.14. So we moved it from 86.12 to 95.26 to 101.14 now. So locking in profits, staying long the stock, letting winners run is really the name of the game here. So earnings came, we had a dividend paid, earnings came up, gapped higher. All right. So now still 101.14. 101.14. All right, so now we're getting tested at that 101.14, and this was a mistake I made in a Facebook trade, recently, that maybe I'll do another one of these videos on, that I owned call options on, and because it was call options, I was very aggressive with the trade, and I was moving stops up to, to new consolidations, even though they were well above trendline support. So with CAT, I thought, because I owned stock, I was much more, much more lenient with it because it was stock and not options. So that's one of the reasons I actually like to own stock. I feel like I trade better with stock. Obviously, I'm not going to make the big gains like you do in options, but I also feel like, because I'm comfortable with the stock, I trade it the way I should trade it. So anyway, so trendline broke here on May 20th, but as you can see, we came back to our 101.14 stop and never broke it. All right, so now it's going sideways. So now what we could do is we could actually take this consolidation and say, well, this is actually a new consolidation area, right? Because now we've really identified that 101.14 is a valid level for stop, because we bounced off of it right here on the 20th. So again, we go higher, 101.14, right? And now we have another consolidation area, another breakout on July 3rd. So we're able to take our stop from 101.14 and move it to 106.55. Right? So now 106.50 or 106.50. And that's eventually where I get stopped out of Caterpillar, because what happened was I now took that aggressive trend line away. I redrew a trend line that connected those points. Okay, so it's still a valid trend line. And right here, I was testing the trend line, and then the next day Caterpillar had earnings, gapped lower than the 106.50, never retook it. So my exit was July 25th at the open. So essentially we took the trade from 92.13 to the open was 104.23. So just about $12 in the stock over. It was, I think the trade was like 180 days or something along those lines. So like I said, that's one of the ways, and that is the way I exit positions. I let the stock tell me when I'm wrong. I could excuse me, I could very easily, maybe this is what's happening, is that there's another trend line that's down here, but at this point I'm out of Caterpillar. I'll wait for it to set up, because the next setup would be if it broke above 110. Then that would be another entry point, and I could say that my stop would be down here at this 104 level. But like I said, that's how we exit trades, that's how we trail stops, and that's how we let winners run. So I hope you enjoyed it.
That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.